We are in for the best ride of all because 2023 is a pre-election year, my friends. If Michael Burry turns out to be right and we witness a black swan event in the market, I will be the first one to admit I was wrong. Hey there traders, buckle up because we've got some mind-blowing news headed your way. Have you heard about Michael Burry and his jaw-dropping move of putting a whopping $1.6 billion on the line against the market? Can you believe it? I mean, what's the logic behind this gutsy move? And the burning question on everyone's mind, is the US stock market on the verge of an imminent crash? Well, my fellow traders, stay tuned for all the thrilling details. But first, I want to introduce myself. I'm Bernd, an experienced full-time trader with a solid 10 years under my belt. I manage a mind-boggling $2.4 million of top-term capital and even run a licensed investment consultancy in the vibrant city of Dubai. Oh, did I forget to mention, I was also crowned the #1 trader on FTMO for 3 consecutive months. Yep, I'm living the trader's dream, my friends. Now, let's dive into the fascinating world of hedge fund manager Michael Burry. You might remember him as the mastermind who predicted and profited from the 2008 crash caused by the subprime mortgage crisis. The man's a legend, featured in the acclaimed book The Big Short by Michael Lewis and the mesmerizing 2015 film that followed suit. Back then, Burry's logic was crystal clear. He spotted the imminent collapse of the housing market due to thousands and thousands of subprime mortgages teetering on the edge of default. While the banks were busy pushing these mortgages like hot cakes, Burry had one thing in mind: profits. And boy, did he scoop them up for 2 consecutive years. Talk about an epic win. But wait, my friends, brace yourselves because Burry's latest move is anything but ordinary. This time, he's placed a jaw-dropping $1.6 billion bet against the market. Yes, you heard that right. And today we are going to unravel the mysteries behind this daring move by answering 2 burning questions. How in the world did he do it? And why do I think he might be wrong? So here's the juicy part. Burry reportedly purchased $1.6 billion worth of put options, those sneaky short positions against the market. And guess what? You can actually find these contracts on the SEC website if you're feeling curious. Yep, that's public information for all you inquisitive minds out there. But hold your horses, my friends. Before you start calculating how $1.6 billion compares to Burry's entire portfolio, let me drop a major truth bomb. Brace yourselves. The $1.6 billion figure isn't even close. How is this even possible, you ask? Well, it turns out that he never even bought put options worth a mind-boggling $1.6 billion in the first place. I know, it's like something straight out of a thrilling movie plot. But hey, that's the world of trading for you. Full of surprises and jaw-dropping twists. Stick around, my fellow traders, and let's uncover the truth together. You won't believe what I just found out. According to whale wisdom, Michael Burry made some serious moves in the market. He bought puts in the SPY and the QQQs. These are index funds that track the S&P 500 and Nasdaq, in case you didn't know. But wait, here's where it gets interesting. That $1.6 billion you heard about, it's actually the notional value, not the present value. Notional value represents the maximum possible value of options. So, what the news claimed was just the actual price multiplied by 100. Now, let's get down to the nitty-gritty. Burry's firm didn't actually pay that whopping sum as a premium for the put options. Nope, not even close. Depending on how far out of the money they were and the expiration date, the actual cost came down to around $10 million for the SPY options and $6.8 million for the QQQ options. Still a hefty sum, but not as mind-blowing as the headlines make it out to be, right? Now you might be wondering, why did Burry choose to short the market? Is this a savvy move or a risky gamble? Well, let's explore the why together. Could he be onto something? Or is there a chance he got it all wrong? Can you believe the surprise rise in share prices this year? But guess what? As a seasoned trader, I knew that something big was coming. Just check out my Instagram story highlights where I predicted this move back in December 2022. I totally saw this coming. And that's not all, folks. For all you Online Trading Campus members out there, we always kick off the year with our epic stock market roadmap. Now, I know you're all dying to know what happens next, right? Brace yourselves, because here's the lowdown on how the election cycle influences the markets. The election cycle influences the markets like the moon affects the tides. Get this, the 4-year cycle, also known as the election cycle, is one of the most vital cycles on the US stock market. And it's not about party affiliation, no. It's all about the year of the presidency. You see, presidents want to secure re-election or have a successor from their party. So before the election, they pull out all the stops to stimulate the economy and create a positive vibe among voters. You know what that means. The markets get a massive boost. It's like a roller coaster ride of loose policies and skyrocketing stock prices. But hold on tight, because after the election, things tend to take a different turn. Unpopular measures like tackling a growing government deficit become more frequent. And you know what that does. It puts pressure on share prices. It's like a game of cat and mouse. And just when you thought it couldn't get any more topsy-turvy, the tightening of monetary policy threatens to shake things up again. The pre-election year is the best. Now let's talk about numbers, shall we? Did you know that in the past 123 years between 1900 and 2022, the Dow Jones recorded some insane average gains during the pre-election years? We are talking an impressive 9.03%. That's way ahead of the pack. Post-election years trail behind with only 4.7%, and midterm election years, well, they barely hit 0.66%. But guess what? We are in for the best ride of all, because 2023 is a pre-election year, my friends. And you know what that means. Fasten your seatbelts. So what's next in the second half of this thrilling pre-election cycle? Get ready to buckle up and stay tuned, because I've got all the insider info you need right here. Let's ride this wave together, folks. You won't believe the patterns I've uncovered that can help you ace your stock game. So picture this. I've analyzed the average course of the 12 years leading up to every US presidential election. My incredible chart gives you a sneak peek into the ups and downs of pre-election years. It's like a seasonal chart with a twist. Get this. Only every 4th year is considered. Now, get ready for the truly captivating part. Brace yourselves for the sensational gains in the first half of the year. But wait, there's more. The second half of the year brings a decline that keeps you on the edge of your seat until mid-end of October. But guess what? This is where the magic happens, my friends. The 3rd week of October, the sweet spot for buying stocks and equity indices, is exactly when the legendary year-end rally begins. Hold on to your hats, because this stat will blow your mind. Over the past 12 pre-election years, my predictions have been accurate a jaw-dropping 91.67% of the time. We are talking about just one single negative 4th quarter in 2007. Can you believe it? And here's the cherry on top. The average gain from October 19th until the year end for the Dow Jones in pre-election years stands tall at a stunning 4.95%. So let's do a challenge. Please hit that subscribe button, as I will keep publishing more accurate forecasts throughout the year. And hey, it's a fair game. If Michael Burry turns out to be right and we witness a black swan event in the market, I will be the first one to admit I was wrong. So make sure to tune in for that too. But I will be long the equity indices and some stocks from around mid-October. Thank you for watching. Happy and safe trading, everyone.